Hello everyone, Kim Hong here. Okay, so today I will be sharing a trade idea with you guys. All right. Let me just share my screen with you. Okay, so this trade idea is for the dollar-yen pair. Dollar-yen, all eyes are on the jobs report. Okay, as you guys know that today, the US non-farm payroll report will be released. Okay, at 2030 GMT plus 8. Okay, so I actually spotted I would say an opportunity. Okay, on dollar-yen, which is why I want to share this trade idea with you guys. Okay, so basically this trade idea is it actually has a straddle setup, okay, a straddle setup on the daily time frame of dollar-yen. All right. So what's the motivation behind it? Okay. So personally, I feel that this is a make or break report, okay, as it will actually impact on whether the US Federal Reserve will be announcing a quantitative easing tapering, okay, later on in the month during their monetary policy meeting. Okay, now if you guys recall, back in the Jackson Hole symposium that took place last Friday, okay, Federal Reserve Chairman Jerome Powell, okay, highlighted that the substantial further progress condition has been met for inflation. Okay, so the Fed's dual mandate, as you guys know, in order for the Federal Reserve to consider a cut in quantitative easing, they would want the dual mandate. Okay, the first one being maximum employment, the second one being price stability, which refers to inflation. Okay, so the Federal Reserve will want these two mandates to achieve substantial further progress, okay, before the central bank will consider a tapering in quantitative easing. Okay, so during the Jackson Hole symposium, we have heard from Jerome Powell that substantial further progress has been made, okay, for inflation. Okay, as you guys know that the US inflation has been rising very high, okay, to maybe like multi-year high. Okay, so inflation part of things is, I would say, it has already received the green lights from the Federal Reserve. Okay, so with that, we are left with one more mandate, which is the employment. Okay, which is why right now the Fed will actually turn its attention to the US employment. Okay, now unfortunately, okay, the US employment, the number of jobs, okay, being added so far since the major huge loss from the pandemic last year, okay, it's still, the current jobs is still, I think around 5.8 million from the pre-pandemic level, okay? So they have quite a bit more to recover, okay, in order to reach the pre-pandemic level. Nonetheless, okay, Jerome Powell did mention that, yes, it's clear that the employment market, the jobs market has been making strong improvements, although they are still, quite a figure away from the pre-pandemic level, right? Now, so the market expectation for the number of jobs being added in August is 720,000 jobs. Okay, personally, I feel that this is quite a strong number. Okay, although it's lower than the previous release of 943,000, which is really a strong number. Okay, we have seen probably a couple of months of 900K figure. I think it's for July, for the month of July and June. Okay, due to an upwards revision. Okay, so yeah, although 720 is it's quite a bit of, it's lower, okay, lower than the 943,000 figure. This is nonetheless still a good value. Okay, it's a good figure for the Fed to consider, to satisfy the Fed's condition of making good progress towards the maximum employment. Okay, now if the data were to release at as expected or higher, preferably higher, then of course it's actually good, right? It gives Fed the confidence to actually consider an announcement for QE tapering during their September's meeting. Now, what if the figure is lower than the expected value of 720,000, right? Is it possible? Of course it's possible. With the current uncertainty caused by COVID situation, anything is possible, okay? So I would like to highlight this point, okay? Throughout August, okay, there has been a rise in COVID cases across the country, across the United States, okay? Now, this situation may actually lead to a softer jobs figures, okay, coming out from the report, all right? So I would say be ready to expect for anything below 720, okay? Of course, you know, anything greater than that is good, but yeah, just be careful that, you know, figures may fall below 720, right? As we have seen in the ADP release, okay, on Wednesday. Yeah, on Wednesday, the figure was actually, I think, 700 over 1,000 jobs. It actually fall short of the previous the expected figure. All right. So if let's say the figure for this non-farm payroll data, okay, were to fall short of 720,000, okay, what's this going to do is that the Fed may consider, you know, holding back on their announcement, their QE tapering announcement, all right, probably to the meeting after next, which is November, all right. This will actually give them more time to reevaluate the jobs market, okay, to make sure that the jobs market is making substantial progress, okay, towards the maximum employment, okay. So with that, I think we will just go straight into the chart. Okay, I think things will be clearer over there. Let me just share my chart with you. So back to the trade idea. Excuse me. So dollar yen. As I mentioned earlier, okay, this is actually a straddle setup. All right. Let me just zoom in so you guys can see clearer. As you can see, right now what we are looking at is the daily chart. Okay, the daily chart. Since August 18, okay, probably like for the past 14 days, 2 weeks, okay? For the past 2 weeks, dollar yen has been ranging within 90 pips, okay? Is, I would say, in consolidation, okay? This many will put it in consolidation for the past 2 weeks. Probably, okay, likely because the market is waiting for the release of the non-farm payroll report, which will have a big impact on the Fed's decision, right? So this actually gives us a opportunity, or rather two opportunities, one buying and one selling. Why is that the case? With this, okay, as you can see, even with the Bollinger Bands over here, you can see that it's starting to squeeze, okay? Hence the phenomena, Bollinger squeeze, okay, which indicates low volatility, probably low volume, okay? No clear direction in price movements, okay? As you can see from our MACD indicators over here, this blue and red line, and this green and red line over here, they are basically just flat, all right? They're just flat. Let me just zoom out so you can see it, like, you know, with no bias. And you can see the dotted line over here, which is the stochastic, is also flat, all right? So basically, this tells you that everyone is just waiting for the release of the non-farm payroll, right? So with a straddle setup, we can look to buy and we can look to sell. Now, why is that the case? Suppose the jobs figure turns out to be good, okay, better than expected, or maybe as expected, all right? Then we may actually see a strengthening in the US dollar, right? So we will want to look for buying opportunities in this case. So upon the release of positive non-farm data, okay, if dollar yen were to break out of this purple region, this straddle region, rectangle over here, then we will be looking to buy at 110.5, all right? However, as I mentioned, because of the uncertainty caused by the Delta variant, COVID, all right, if the data released were to, you know, were to underperform, were to be softer than expected, then there's a chance that dollar yen may weaken. Okay, now in a case whereby it weakens below, or rather out of this region, okay, we will be looking to sell at the 109.2 level. Okay, at the moment I do not have my stop loss being set in place yet on my take profit. Okay, this is because I would want to wait for the trade to trigger before doing so. All right, so rest assured there will be plenty of time for us to actually set our stop loss and TP. Why is that the case? Because the trade ideas that I normally set out are for longer term, right? So if you guys are working adults, working, studying, just simply don't have the time to just keep looking at charts and things like that, then consider taking my trade ideas as a guide, okay, as a guide for trading, because the time frames that I look at are normally H4 and the daily chart. Okay, so as you can see, this 90 pips, in a lower time frame straddle scenario, it's most of the time like 40, maximum 50 pips, but my straddle is 90 pips. So it shows that this is I would say a swing trade, not position trade, I would say, but yeah, just a swing trade. Okay, so yeah, with that, Traders Club members, okay, if this trade setup were to trigger, okay, I will keep you guys informed in the Traders Club. All right, otherwise that's the end of my trade idea. Okay, thank you guys for tuning in, and yeah, trade safe and keep a lookout for the non-farm payroll data tonight. All right, thank you.